Back with us, Ben Slavin is a global head of ETFs and asset servicing at BNY Mellon. Ben, we are a couple months into 2021. It seems the craze is in high growth speculative companies. We spent this morning talking about SPACs. So do we see that show up in ETFs? What effect has this had on the landscape as investors pile into companies like the GameStop story, AMC, but then at the same time, a lot of this very growth heavy tech as well?
Well, on my list of predictions for the ETF market for 2021, I can honestly say that GameStop and Reddit were certainly not on that list.
Right.
But we have seen some impact in the market for ETF investors that really everyone should be aware of. First, it's a performance story. So the ETFs that hold those names obviously were impacted by performance. But it points out a really key point about why investors love ETFs, and that really has to do with the transparency of the structure. So it's important for investors to know what you own and look under the hood, so you're able to see in a real-time basis exactly how the ETF is positioned, and if they hold names like GameStop, AMC, and some of the other names that we saw really become quite volatile over the last few weeks. Second, it's really a liquidity story as well. We saw tremendous volume flush through the system once again. So our platform at BNY processed record trading volume. For example, in silver last week, we saw an incredible amount of inflow into the silver ETFs, but also the products themselves saw a significant increase in trading volume on the secondary market. But ETFs during this period have functioned exactly as they were designed and really provided investors with that liquidity and price discovery and access to some of these names that you would expect.
Ben, has anything been learned from this experience about how to design ETFs or structure anything, like when an XRT basically becomes a proxy for GameStop? I mean, the chart for XRT, is it really supposed to do that? I mean, I guess technically it did, so it can.
Well, it's a fascinating topic. If you're a long investor in XRT, for example, really this was a non-event. Beyond that, you saw the weight in GameStop, in the case of XRT, increase rapidly with the price. Now, XRT is an equal weighted product, and you saw GameStop quickly become, I think, north of 20% of that ETF's weighting. That happened in a few other ETFs as well. And now you've seen that weighting start to mean revert and come back with the price action as GameStop's price and the market is sold off. But really, there was very limited impact to those long-only investors who are the buy and hold types. But it was also interesting to see the ETF function as a source of inventory for the street to be able to access GameStop shares by being able to redeem the ETF in kind. And that really was a fascinating story to watch, but ultimately shows how ETFs are really a tool that the capital markets can use in these types of markets, providing investors with, again, more option for liquidity.
Okay. So it seems like the momentary, flirtation with chaos was averted for the most part. I mean, a couple pretty wild candles on the chart for XRT and some of the others, but they go on and they still are basically in the same trend that they were prior. So this kind of brief spaz that nobody can control, right? I mean, strange things happen here in markets. If you think about, Ben, the rest of this year, where does that put the focus on? Do you expect to see a lot more issuers of high growth, of very kind of, in vogue tech type of funds? Or are we going to see more ETFs about reopening? Are we going to see, I look at my list of ETFs for the reopening, there's not a lot of great ones. There's a few that kind of capture, a brick and mortar presence, but for so long, nobody wanted anything to do with that area of the market.
Yeah, I think we're going to see a few different trends. First, to begin with, I think the story of really 2020 and again into 2021 has been actively managed ETFs. And really, ARK ETFs have led the way there. Both from a performance standpoint, but also from an asset gathering standpoint as well, continues to attract assets and investor interest globally. And it's really another fascinating story to watch. And I think we'll see ARK continue to grow this year, but we'll also see other ETF issuers try to position to capture those trends. I also think we're going to see some additional rotation into international ETFs. We saw in the first month of the year, ETFs picking up exactly where they left off in December, which was at a record pace. And international equity ETFs once again led the way. I also think we're going to see some additional flow into emerging markets on the back end of the year as another trend that I would expect to see continue to evolve over time.
Okay, so there's these kind of economic recovery proxy plays, right? You can go recovery through emerging markets, you can go recovery through the kind of more cyclical groups. But what about where's the BACK, Ben? Where's the back ETF? You think someone's going to get a back to normal ETF? You want to make a prediction? We got a work from home ETF. Why not a back to normal ETF?
The industry has been incredibly innovative when it comes to those products, and I wouldn't surprise that one of those or more are in the works. Just when you think you've seen every ETF possible, here comes another one. But certainly, you are seeing those thematic ETFs, Oliver, as you mentioned, such as work from home as another great example, really playing off these themes. And we've seen a rise in the use of these ETFs, specifically from retail investors who are looking increasingly to ETFs to play these various sectors and really sub-themes. And I expect, again, to see really a record amount of flow, as well as a record amount of product development, really to continue in this area. Again, picking up on the trend that we really saw the last year or two.
Ben, one that we haven't seen yet, of course, BTC. What's the latest? Before I let you go, we got to check in, of course.
2022 is my prediction.
2022? We're at 40,000. What do the regulators want? This thing hasn't had a Mt. Gox or a weird hack in years. What are they waiting for, Ben?
Give them time. I do think, though, the products that we've seen in the market to date have really demonstrated the need for an ETF and also show the demand from investors. I will expect to see a lot of issuers lining up to launch Bitcoin and other products that hold digital assets, and that is something we're going to be hearing a lot about this year. But I think the reality is that it's going to be into next year before the SEC, the exchanges, and the other regulatory agencies will get behind it. Okay, Ben, great stuff. Always like the update. Fun conversation. Thank you. Thanks again. Ben Slavin's Global Head of ETFs and Asset Servicing at BNY Mellon.